Welcome back. Today we're talking about credit. What credit is, why is it so important, and some 4 ways you can actually build your credit score. So what is credit? Credit is a numerical representation of how trustworthy you are to pay back the money that you have lended from a bank. Now it could be anywhere from credit card or a loan or a mortgage. Now, why is credit so important? Why should we even care about our credit scores? I think it boils down to 5 main reasons why we should care about our credit score and our credit. And the first one is house mortgages, business loans, credit cards, job employers, and interest rates. These are the 5, I think, the most important reasons why you should care about credit. Now, let's talk about interest rates first. A person with bad credit means a person that has a bad track record of not paying back their loans or the debt in time. So, the banks want to balance out the risk of lending this person money by hiring the interest rates. So the financial institutions, they hire the interest rates to people with bad credit to balance out the risk that is associated with lending people with bad credit money. So let's say you're just a high school graduate or just starting college. You don't have a good, you don't even have a credit record, right? You're just starting out. Probably if you want to buy a better car or a nicer car, you will have up to 6 or 7%, 6 or 7% interest on your car loan, right? However, if you have a cosigner, probably let's say your parents, probably the bank could get it down onto 4 or 3%, right? That shows how important credit is to affecting the interest rates that the bank will be allowing to give you. Now, second, job employers. Some job employers want to seek quality employees that have a good track record of financial management, people that can actually, take care of their money. So they will actually look at your credit record and your credit score, like how are you actually able to deal with your money. Now here is a scale of how the financial institutions actually measure your credit score from 300 to 850. They use this scale. So now 300 to 599 is considered very, very bad credit. These are people that, either filed a Chapter 7 and Chapter 13 bankruptcy or just have really bad credit track record. Now, if you're just starting out building a credit record, track record or credit record, you start around 600 or 649. This is the poor area where you actually don't have really good credit. Now move up is fair and average, and up to excellent. Excellent is 850. These people with such good credit, actually banks will come to you to ask you if you want to loan money from them. If you look like some people that have a really good track record of credit, banks will actually, regularly reach out and ask them if they're interested in loaning money because they have such good track record of paying back their, debt on time. So a few reasons you want to care: interest rates, job employees, credit cards. You want to have, have a bit bigger range before you max out a piece of credit card. If you want to get loans, whether it's business loans or house mortgages, those are all very, very important to get your loans approved. You have to have, decent credit for the banks to want to loan you. And even if the banks want to loan you, you want to have a decent interest rate, right? So that you don't have to be wasting a lot of money, Okay. Now, we'll be talking about the four most common ways, or the 4 ways that you could build credit from scratch. Now, if you're just building credit from scratch, a really good way to start is a secured credit card, right? These secured credit cards are backed by cash deposits in the bank. So usually if you have, let's say, $5,000 backed in the bank, this credit card will be able to, you could use 5,000 on this credit card. Now this is a really, really beginner's way to, basically jumpstart your credit and credit score. It doesn't actually help in a lot, but it just it starts the snowball running. It starts the snow starting to roll. And the second one is good habits. Having these 3 good habits could actually go a long way. The first one is making sure that you make 100 of the payments on time. And the second one is small. It's quite minor, but it's actually quite important. Is avoiding opening too many new accounts, bank accounts. That is because a lot of these financial institutions, they look at your the average age of your bank account, and the age of the bank account, or the age that your account has existed, actually affects your credit score, believe it or not. So you really want to avoid opening too many accounts at once, because that will lower your average of the age of the account. Now the third one is quite scary, but you still don't want to overlook it, is to check your credit reports annually. Make sure there are no major errors or accounting errors or things like that. So you just make sure having these 3 habits can really go a long way. Now, the third one is applying for a credit builder loan. Now, let's say you don't have a good credit track record. Maybe you've paid a few debts late, or maybe you've even filed for bankruptcy. Now, what you want to do here for a credit builder loan is actually, sort of like a forced saving plan. So let's say you apply for a credit builder loan to the bank for, let's say, $20,000. That's a little bit too much. So let's say $10,000, and it's sort of like a forced savings plan. How do I put this? You put your money in the bank, so the money is kept in the bank, and every month you have to pay the amount of money that you guys initially agreed on, so to gradually build your credit over time. Now, most of the banks have provided this service of a credit builder loan, and it's also like a forced savings plan, like a certificate of deposit or something like that. Now, lastly, the fourth method to build your credit is to get a cosigner. Now, I sort of touched on this previously when I said when you want to get a loan approved. Let's say you don't have a good track record, right? So the banks and financial institutions charge you with a 8% interest rate on this loan. However, if you get a cosigner with decent credit, probably he or she could lower it up to 4 or 5% of interest rate. Now, using a cosigner could be seen as a sapling. I drew these 2 trees. Excuse the bad drawing, but these 2 trees are representations. So let's say this is you, just starting out building your credit. You're just little sapling, right? You need these supporting beams to help you grow. So those supporting beams could be seen as the cosigner, right? They help you establish your first account. They help you help your credit grow first. And after that, you don't need these supporting beams anymore, because you have an established track record of good credit. Now, so with this, after you have established a good track record of credit, financial institutions can really charge less for the interest rates, because it is not as big as a risk to lend you money, right? So okay, so let's do some review. One of the biggest reasons, right? You really want to make sure that one of the biggest reasons you want to get your credit score up is because you could actually lower interest rates by a lot, by up to 5% or even 6%, if you have a good credit score versus someone with bad credit score. That's something I really want to stress about. Something that you guys really want to keep in mind is that credit score could actually influence a lot of your financial transactions. So through interest rates, through job employees, or even sometimes if you're a tenant, right, or a potential tenant, and the landlord wants to check your credit record, wants to see how well you basically pay back on your debt and your loans. They want a tenant that is able to pay their rent on time, of course. So let's say you're gonna rent an apartment in, let's say, Chicago, right? You want to rent an apartment in Chicago, and the landlord asks for your credit record, and you provide it because you have such good credit record. The landlord would accept. But if you have bad credit record, around 600, then probably there's a high chance of being rejected, right? Okay, so these are the major reasons why you want to build credit, and the 4 major ways you could build credit. And that'll be end of today's video. If you guys do, we'll see you guys in the next video.